Thank you, everyone. I just wanted to take a few minutes to share some initial thoughts about the Union Budget for 2023-24, which was presented by the Honorable Finance Minister. I think the budget comes across as extremely balanced and progressive. And what strikes out most is that there is primacy accorded to growth, which is as an industry chamber, as representatives of industry, that is exactly what we wanted to see. And clearly a focus on the agricultural sector with significant outlays, a focus on urbanization and on digitalization is a continuation of what this government has done over the last 7 or 8 years. But coming back to the growth orientation of the budget, what is absolutely significant and what we are delighted to see is a substantial 33% hike in the capex outlay at 10 lakh crores, which is the highest ever, amounting to about 3.3% of GDP. And in fact, when you take into consideration the grant and aid to states, etc., then that number further goes up to 13.7 lakhs, which is 4.5% of GDP, and that certainly is a substantial number, which we welcome and which is a continuation of the heavy lifting that the government has done during the pandemic and its immediate aftermath. And we are, of course, now beginning to see green shoots of recovery in as much as private sector capex is concerned. But we do feel that bolstered by these numbers, this will be a year of transition from being substantially government-led capex to the private sector also coming in to play a noticeable role. One other point about the growth orientation is the fact that it is inclusive. So with an outlay to the credit guarantee scheme of 9,000 crores, that will enable a further 2 lakh crores of credit for MSMEs, and the interest rate is proposed to be brought down by 1%, and that is again noticeable in terms of the impact that there will be there for MSMEs. Moreover, the issues are relating to payment to MSMEs. Now that we are moving to a cash basis from an accrual basis in terms of accounting, I think that should, to a large extent, make sure that MSMEs are not affected in terms of payments which are held up. One other point is clearly a couple of other points I'd like to make. One is the focus on ease of doing business, which of course has been a hallmark of this government, with close to 39,000 compliance touch points being minimized, more than 3,400 regulations being taken off the books. But the specific EODB measures in this budget, which is through unified filing option, I think that is significant, as is the common business identifier now being the PAN, and which will have legislative backing, and so that is, I think, something which will have a significant impact. What I wanted to end my remarks is the fact that this is a budget which is credible, which again is a trend that it carries through from earlier budgets presented by the Honorable Finance Minister. The fact that the government has met the fiscal deficit target of 6.4% for FY23 and is and is committed to 5.9% for FY24, and a reiteration to go down to 4.5%, less than 4.5% by FY26, I think lends credibility to this budget. And it is exactly what we had asked for, which is that there must be a glide path for fiscal consolidation, but it is something that has to be done keeping in mind the importance of prioritizing growth first and foremost in our economy. And equally in terms of 11.8 lakh crores of government borrowing from markets, I think is a very manageable figure which will not stress the banking system or crowd out private sector borrowers. I think that's important to keep in mind. And the final point I wanted to end with was in terms of what can be considered a stimulus measure to consumption, which is the rejigging of the tax rates. While we will need to see the details to get an exact idea, but our assumption is that first of all, there was a clear announcement about the rebate being up to a level of 7 lakhs under the new income tax regime, and at some level we presume that the reduction in the surcharge rate from 37% to 25% is perhaps also linked to the new tax regime, but we will wait for the details. But if you look at a figure of about 35,000 crores net being what the government is foregoing in terms of direct taxes, I think that's a very, very noticeable boost to consumption in the country, and that is something that we welcome. So overall, just to reiterate that it's a balanced, progressive budget and one which gives primacy to growth. And primacy to inclusive growth, and as well as focusing on areas of sustainability through significant outlays for energy transition, for storage, etc., for fixed storage, etc. So it's something that I think we're very, very happy with what has been presented today. Having said that, I think governance is year-round, and while this budget budget day is perhaps the most important day in the fiscal calendar, but certainly I think we can look forward to a nimble-footed government doing what it takes to keep India growing as one of the world's fastest large economies. And given that the global situation is somewhat gloomy, I think this is a budget which not only is significant for the domestic audience, but it truly makes a move towards placing India as the world's engine of growth. Thank you.
Hi, good afternoon, sir. This is Sumit from WION on this side. I would like to ask you that since India is projected to be the fastest growing economy in the world as shown by the economic survey, do you think this is going to propel India further in the direction all those announcements which have been made today?
Absolutely. I think that's the point we were making, that this is a budget which is balanced, which is progressive, and which gives primacy to growth, which is also inclusive, as I pointed out with some of the budget provisions. And this is significant not just from a Indian perspective, but given the global situation, as I was just mentioning, I think this positions India to continue on its path towards being a $5 trillion economy and going on to become the third largest economy before the end of the decade. So yes, this is something significant not just for us, but I think for the world at large.
Sir, I am sort of from Z Business this side, sir. So this side, on your right. Yeah. So as India is the fifth largest economy and moving on the path of $5 trillion economy, what are your views on capital expenditure, the thrust on capital expenditure, which has gone up by almost 33%?
I think that's really the highlight figure of this budget. When we were at 7.5 lakh crores outlay for FY23, which was the highest ever at that point in time, that was a 35% increase over the previous year. And the general expectations from an industry perspective was that allocation for capex should go up this year. But perhaps, I think it would be fair to say that very few were expecting an outlay of this nature, which is a further 33% increase and reaching the magical number of 10 lakh crores. more importantly, 3.3% of GDP. And then if you add the grant and aid to states going up to 13.7 lakh crores, and which comes in at 4.5% of GDP. So I think this is substantial. It will provide a significant boost to the economy. It will. This is an outlay which sort of is all pervasive through various sectors of the economy. So when we talk about capex, it has a multiplier effect, and not only that. I mean, presumably, the bulk of this capex will be towards public infrastructure, which not just provides a stimulus when it is implemented, but adds to enhancing the ease of doing business. It reduces the cost of doing business when we talk about investments in infrastructure, etc. It eases the life of the common man. So I think yes, it's a very, very significant piece of the budget.
And
probably
thing, sir.
Yeah.
So what about the uptick in the private investment, sir?
So, uptick in the private investment at some level is obviously linked to capacity utilization. And the last manufacturing survey that FICCI carried out showed that the average capacity utilization was around 70%. If I'm not mistaken, in the economic survey, the number quoted is a little higher because it's obviously more recent. I believe the next edition, the next iteration of our manufacturing survey will indicate that as well. What is contained in that average number is the fact that certain sectors are like auto and its ancillaries, paper, etc., are at in excess of 90%, and that's where you are seeing capacity additions happen. But there are certain sectors which are in the 40 to 50% range, 55% range, where obviously some of that slack needs to be taken up before expansion projects are announced. But by and large, I think the data that I have seen shows that on a quarter-on-quarter basis, announcements by the private sector in terms of new projects and capex outlays has been going up. So it's beyond, I think, green shoots. I think it's something which is beginning to gain momentum. And again, a supportive budget of the nature that we are seeing today, announced today, will certainly give a boost to that.
Thank you, sir.
My question to Mr. Mehta this side, Sumit from Beyond once again. Do you think that all these steps which have been taken today are going to further get the growth momentum, especially in the rural areas and semi-urban areas? What's your view on that?
Yeah, thanks for that question. When we look at the budget, we should not look at it in isolation. We should look at the momentum in the economy from where we are coming. Today, if you look at your macro indicators, we are looking at that slowly but steadily. Even the wholesale price inflation is slowly converging, going down towards the consumer inflation. That's a good sign. Our forex reserves are very robust. And if you look at the deficit that the government had indicated in the last budget, in reality, the deficit is going to be in that vicinity. And the deficit has not been controlled by cutting back on capital expenditure. That's again a good sign, because what the economy needs is more of capital expenditure and less of revenue expenditure. So those are good fundamentals, and the budget builds on that. Capital expenditure has a multiplier effect. Honestly, I wasn't expecting a 33% increase. And if you look at it in the last 8 years, the government has increased the capex by 4 folds, which is massive. And very clear indication is that we are at a stage where government capex will crowd in private investments. The private capacity utilization, as Subrakant has said, is going up. Our survey indicates that nearly about 20% or slightly more than that are reaching the capacity utilization. So the private capex will also come in very clearly. And the fundamental steps that the government is focusing on, whether it is skilling, whether it is going up the value chain on innovation, whether it is AI hubs, or whether it is bringing in private sector to use ICMR labs, or digitization, giving the benefit to the agri sector, which we have really not utilized at scale today. That will augur also well for the farmers. We will be able to tell them what crops to sow, where the issue of water is. All those are going to help immensely. So there is no one magic bullet, but if you piece everything together, it's a confident budget. It's a budget which is focusing on growth with the primacy of growth, And I think it will augur well for the country and for the people of the country.
And nothing much for the defense sector. And what's your view on the healthcare
Defense,
sector?
one has to see the total budget outlay vis-a-vis last year. I would believe it would have gone up, but one needs to look at those numbers.
Should we head out there?
Yeah.
Hello.
It's always been raising